sort of achieve today. And if you're watching us on YouTube, we are doing horizontal, right, intentionally, so we can kind of just have that feel of a YouTube shorts, and then it's just the live session we're doing together all the same. That's what we really hope to um, achieve. So I want to say thank you all for being a part of all we're doing, guys. I want to say thank you. So please, I would love for us to engage each other today, and while we continue with this live session. So the live stream we have before us today is a very important one. As mentioned, the title is Understanding ICT, Market Analysis, and Trading. So what we hope to achieve in this first episode here on KuCoin is to introduce us to the subject or the concept of market structure, price action analysis, have a practical market analysis, leveraging all we're going to probably be discussing, identifying potential trade setups, understanding liquidity and market behavior while we go about discussing, around the markets, right? I think that's primarily why we are going about all of this. So if you're just joining us on YouTube or wherever it is, like KuCoin, you're welcome to the ICT trading hub of our live sessions, right? So we do ICT mostly, but then we know every other major trading strategy that is there right now. So you are safe to ask any question related to any trading style of your choice. So a quick one, let's kind of show us where the market is and what happened after we took the trade of yesterday. I think it's kind of great when we see the market playing out with some sort of logic that is quantifiable and that could be replicated, right? Which is, of course, the replicability of the analysis that we do here. So let me just sort of show you guys. Well, yeah, there you go. So you remember this trade, right? Okay, so as of yesterday, by the way, there is the availability of you replaying the live session we did on KuCoin. And if you're watching on YouTube, you're wondering, am I saying KuCoin like the real KuCoin? Yes, the only KuCoin. So you can actually join our live stream. Let me also try sharing this on X, on my X account. Very important. Very important. So yeah, the only KuCoin, and that's what we are streaming. So I would love for you to, if you don't want an account, use our referral code to get yourself in the cycle. Yeah, so this was an analysis we made yesterday. Okay, fine. For those who want to know how it looks like, I would bring a picture. Just to juggle our memories. How the analysis was. We're going to be starting off on this note, and then I'm going to pivot into introducing us to the understanding of ICT. By the way, ICT stands for Inner Cycle Trading. What does that mean? And how is this something meaningful to any trader? Is this about Michael Augustine? By the way, there is a big trader out there who goes by the name Michael Augustine. He is the one that essentially came about giving this trading strategy in nomenclature, by the way. So for context sake, for those who want to know what the analysis looks like, this is the picture. I'm dropping it right here. This is analysis we had yesterday. We gave this live analysis, of course, here on KuCoin, yesterday, the 12th of August. And so you could see we were looking at accumulation, manipulation, distribution, which of course is part of the ICT style of trading. So we did add the market going that way, right? And we had our stop loss hits. I mean, our take profits hits, and we jumped out of the market, all of that. And of course, we made a forecast about Link. We're going to see how that is playing out right nicely. And I told you guys, interestingly, we didn't trade Link. I told you we didn't trade Link. I told you what is going to probably happen if you watched our live stream yesterday. Hope our session is still going well. Okay, fine. It is, I think, because I was going to make a post on You know what? I was gonna make a post on X, right, by using, our cool coins. Yeah, our cool coin thumbnail. That was why I was not hearing my voice again, because I'm also trying to listen so I could be on the same page with you guys. Hey guys, if you know I'm veering off, please do it to help me get back on track. That's why it's a live session, so we can engage and have meaningful discussion. Okay, thank you very much, guys. Now let's get by. So this was analysis we gave about chain link. I told you guys what's going to probably play out. If you had eventually taken the trade, I told you it's going to move from this point. If you remember yesterday, touch down here and touch right briefly above this liquidity point. Yes, that already happened. So if you're taking the trade, you will have taken a buy almost. If you're done 10%, I mean 10x, you will have had 20%. If you're done 100x, you'll have had 200%. If you're done 50x, you'll have had 100%. Well, it's very much risky. I told you this was like going to be playing out on KuCoin, and I'm expecting us to take a buy right here. This is where I'm going to probably be taking a buy. Why? Because I already knew what's likely to play out. If you want to know what exactly was the thought processes like to this live session, I mean, I think you would want to, yeah, you know what? Yeah, you would want to exactly look forward to every of our live sessions. The way we played or made the forecast is what the market you see doing, right? How did I come about this point of prediction? How do I not why did I not then go ahead to take the trade? If I knew this how the market is going to play out, why didn't I take this? Well, because I understand that there is certain components in the markets that gives it the reason to obeying this set of rules. This thought processes is what makes up the old ICT conundrum, right? First, you must know that, which explains why it is named inner cycle trading. Would explain why it's so called that from my own standpoint, anyways. And the reason simply why I didn't take this trade is simply because there are a set of rules I have. I don't want to overtrade every day. Another one, which is I go by a by a trade principle that wants me or enforces or ensures that I take highly probable trade. Well, that could happen, but it could actually not go the same exact way. It could drop all the way downwards here, take out the stop loss here, which of course is one of the reasons I wouldn't take this trade, as the best point to have the stop loss is here, and I wouldn't want to risk an entry here, which is like almost going to be like a 1-to-1 ratio, like risking 1 to profit 1. And so I wouldn't want to do that, which explains why I didn't take this trade, because it could drop all the way downwards and then go back again to this point for dropping. So I would rather wait for it to come right here to this point where I knew I have a more likely certitude as regards my point of stop loss. Because one thing is important. Let me first drop this on X, and also I'm going to do that on YouTube right now. Join us live on KuCoin. So one thing I think is important is the yeah, right. I think I'm gonna probably tell about a story of what happened yesterday. So blah 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 blah. Let me just make a post about the I think that's gonna make it easier. Apologies, I'm just making my thoughts here. So one thing about me is I think it's just best to take trades that are very much highly probable than we go about checking. Let me just try this and try that and try that. We more or less turn out to become, a gambler in that process, which I don't want to be. And yeah, there's just a thin line between a trader and a gambler, and one of which is a set of discipline, set of predictable rules that are applied in trading, which makes it distinct from gambling. My reality of explaining the difference between both. Anyways, let me quickly make this post. So I wanted to quickly make a a kind of link copying of the analysis we gave yesterday as a kind of hook, right, to why folks should ensure they're not missing out on today's live session, that kind of thing. Okay, so I mean, I think doing that is probably going to make my posts around calling them to general live stream more easier. Yeah, So let's get everyone joining this live session. Yeah. So guys, forecasted live on point. So I'm making the post right now so everyone can actually get coming. So my guys, what I then think is the idea of analysis is taking those trades are your discipline, your the discipline you've embodied and whatever it is. That's how I think it's best for me to be taking those trades. And I'm not going to probably be rushing and wanting to just force some trades to happen when they're not probably happening. It's just going to be very much seriously ridiculous, right? That's my belief, and you don't need to believe what I believe in. But I think it's sort of great once it's a profitable one. All right. Fine. Okay. I think our trade what do you call that? Our post is live. Just wait there a minute. There. So guys, apologies. Just let me quickly make a wrap up of what I'm trying to post. I'm having my mind really going back and forth, and I wouldn't want that. Yeah, and that's it. By the way, you could also try making a post for us, right? I mean, yeah, I mean, you could also make this post. It's gonna probably go a long way in ensuring, yeah, that we have more folks joining us right here. By the way, if you've got questions for yesterday's live session, you could as well go ahead to make them known. Probably the smartest thing for us all to think. I think so. Okay, right. We've made the post on X, and I think we're good already. What do you think is going to probably happen to the BK market today? I'm going to explain that. How do I know that Link is definitely going to be making a drop from this point here, likely making this drop of 4%? I'm going to also explain that. So, but first, let's start with understand what ICT is and how AMD, which is accumulation, manipulation, and distribution, which was what we used yesterday, is a part of ICT. So, I want to know if you're really here with me. If you are, please drop a message or an emoji in the live room. Let's say you all put in some one or two things in the live room. Get that going. Get that started. All right. You're also with us on YouTube. Drop an hello or a GM. Okay, I'm seeing greetings one way or the other. Yeah, it goes a long way in saying, yeah. Let's get everyone, joining us right on this page. It goes very much well. The folks joining us on this page. All right. So we are already getting started. We've gone some couple of minutes in, and we don't have a long time here, right? Whatsoever. So, hi. Thank you for saying hello right there on YouTube. I appreciate you saying hello. Okay. By the way, you have the referral code also on YouTube. The referral code is going to be dropped by one of these, like by Nightbot. It's an agent, an AI agent. I guess you could use that to sign up. And of course, let's get going, right? To start with, we always roll out the pricings of this asset for you all as usual here. And again, we're going to probably be doing that right now so we all can be on the same page. I don't know if I could do a recap of what we did yesterday, but then if I would do that, that's definitely going to be coming by. All right, the Bitcoin market price sits at $63,576, Ethereum $881.28, BNB 610, XRP $1. Interest in XRP is currently, Ripple is currently priced as that of a stable coin. Then you have Solana 75.68, Tron 0.3333. Interesting price. Then Hyper Liquid at $57.43. And I think those are the top 10 cryptocurrencies that you have on Coin Market Cap. Now, that said, guys, we are wanting to understand what are the thought processes that goes into our analysis so that everyone else can begin to think that way and of course begin to apply those thought processes. By the way, I have close to how many years? I think it's about 7 years now. 2020, okay, 6 years. Market analysis experience and a couple of certifications. So I've had several losses. Trust me, I've had several losses. And I, for one, think there's almost no way you would come to such a level of understanding the market without having to pay some tuition fees. So when I'm making calls on what I think market is going to probably do, which again the market then gets to do that, I'm not speaking from the point of I know it all. No, from the point of experiences and point of losses that are obviously painful, but are instrumental to shaping my ability to understand what the market is likely going to be doing. As we already are aware now, we are looking at a topic which we've got understanding ICT. What is ICT? ICT stands for inner cycle trading. Okay. And so what does that mean? And how can we understand what ICT is driving at by this topic title? ICT inner cycle trading means being able to read by charts, by session, by time. Now, take note of this. You're looking at time, looking at price. Yeah. You're looking at session, time, price, session. Looking at the time, the price, and of course the session to understand the engine upon which the entire market in its output of expression, how it operates. So you're looking at what is the reality or the real reason behind why there's a support at this level, there's a key zone at this level, there's a demand level, there is a demand zone at this level. You know, there is a double top, there's a double bottom. That's what ICT is literally addressing. We are using ICT to read behind the scenes, right, of the market, so we can have more proximal understanding as to why the market is going to probably play out this way objectively and of course in a very quantifiable way. That is ICT, right? Yeah. Okay, so I think I now could see that the bot has dropped you all a link to register. It's not okay. I'm going to probably drop the link also right again for you all to see. I don't know why it's not a full link that your guys could click. All right, I think I'm just going to probably work on that so you guys could have the real full link. Yeah. Okay, that's actually too much. I'm going to probably work on this right away so that you guys can actually be able to click on the link straight up. So join beat chase. I'm just gonna probably do that. So yeah. Okay, I think that's it. I've been able to put a better option for everyone. Yeah, to not miss out on this. And by the way, the link already to signing up, I've just been able to drop right now. So sorry, I needed to ensure, yep, that I have everyone on the same page. That's right. I don't want anyone to miss out on whatever it is. I'm trying to make everyone fine. Okay. So guys, while we are getting started with the subject of our discussion, I'm very much excited to let you know that once you understand ICT, trust me, you now have a very solid understanding of where and how, why the market is going this way, when the market is going to move, and the how. So the why, the when, the how is literally known, and those are the answers that this gets to let you. So you understanding the market structure, liquidity, price, action, now you can actually apply these ideas in analyzing the market is what ICT is going to be introduced to. And I think we need to start with okay, there's a concept of time in ICT, not today. There's a concept of market structure in ICT, not today. I think there is also a concept. Wait a minute, I want to be so sure we are not lagging. Okay, there is also, right, a concept. Okay, just this is great. Yeah, there is also a concept of um liquidity. I all of those are varying concepts. And again, once you don't understand how all of this plays in the market or play in the market, there is just almost no way you'll be able to win. Trust me. So I think we should start by understanding what is price action, right? In ICT. All right. So what is price action in ICT? Let's start with that. I'm going to probably open a new page. Let's do it that way. By the way, we're going to probably take a trade soon. And trust me, the trade we're on is going to be like, I already told you guys, I'm expecting this to drop all the way here. I don't know whatever it's doing there, which explains what I think is going to probably happen to Bitcoin. Bitcoin's going to take out this liquidity. 63,300 will be taken out. Bitcoin's going to probably drop to 2, 100 in maybe the next couple of hours. I don't know when and how long. So I'm expecting Bitcoin to drop some 1.5% from the current pricing that it is at the moment. So I think we'll be able to then find a new trading entry. But then, as you can see on the 1 hour candle chart, as any 1 hour candle is opening, I think we're going to probably go more lower. And by lower, I'm referring to below 63 thereabout. This is analysis for yesterday. Let me take it out. Of course, you could tell that as forecasted, the market went that same direction. We knew it's going to probably drop, and of course, the market did exactly the same thing. So we're expecting Bitcoin to drop from here down here. I'm going to probably call for a trade soon and explain the logic behind that soonest as we drive on. So if you're asking me, David, what do you think we should do right now? I think I want to take a shot on BTC. I'm going to look at Pippin and perhaps other memes if I want to, but I want to first establish price action at an intro level before we get into taking an execution on the trade. That might take, I'm sorry, but don't forget I'm giving a call for the market to short. Let's just plug in the short indicator, the short icon. The stop loss is going to be like the previous 1 hour candle. Take profit is right here, which is this. Nice, right? That's a very nice one. And that gives you enough room for the market to move, right? To take out this liquidity. But we want to come to a new slate so we can have a kind of writing canva to do our writing. The price action essentially means something simple. Don't forget, we're doing this education session. It's going to probably be every Thursdays. Just up with me. I keep, consistent, and I really plan to. So price action essentially, it literally means, let me just write it. It means, according to what I have here on my note, price action means reading. Let me write that out for you guys. Reading what price. Of course, when we talk of price, we're talking of the candlesticks in the market. Reading what price is doing on the chart, right? Are you seeing that? Especially how it moves. You seeing that? Around, liquidity, structure, and key levels to understand the likely, seeing that, intent of market. So I'm going to probably explain this by breaking it down bit by bit. I want you all to please pay rapt attention while we also employ the logical discourse right here in what it is that we're trying to say. So this is the definition of price action. In other words, let me just bring this down so we can be on the same page and see price action for what it is. So price action means reading what price, which is what the market candlesticks are doing on the chart, especially how it moves around liquidity. What is liquidity? I'll explain that also soon. Structure. What is structure? I'll explain that also soon. Key levels. What are key levels? I'll explain that also soon. Once I introduce this, we're going to look out for making a trade right here, right now in the market. I think the market is going to probably be sitting. I told you guys right now. and we might be trading Bitcoin. We just might not be trading Bitcoin. Whatever it is, we're going to probably be trading. I think y'all will see that, right? So this is what market price action is, as defined by ICT. All right. So you could see that there are three important, thought process in what it is that we've just defined as price action. Number one, excuse me, what do you see? All right, you see liquidity as a key component of, excuse me, you see liquidity as a key component of price action. Then number two, right, you see what we called structure. All of this, you could put market at the front or at its prefix, market liquidity, a structure. Then number three, if you don't mind me, going that route of being a lecturer to you today. Number three, you have the. All right. By the way, you should know that liquidity forms structure, so you can always tell one leads to the other leads to the other, right? Right. Now, of course, that's what it is. So liquidity leads to structure, then structure forms key level. Right. I'll talk about all of those in a moment. I just want to sort of put an icon that shows how interconnected all of these are when you're looking at the market. So again, liquidity leads to structure or forms structure essentially, and then you tell that it is structure that forms key level, right? So if this sort of thought process is already very much solidified in your minds, then you cannot understand what all of this is all about, and how you can relate. Hey, thank you for the love and the greeting, and thank you. I appreciate you all for dropping that. So I want to believe you guys could see this clearly enough in the live room. Maybe I should sort of make this bigger. Okay, this is better for me to do it this way. Let me get back. Okay, sorry. Okay, I think it's going to be better for me to increase the font rather than. Okay. I think this works. Okay. So price action has been defined already as a way of reading the market's candlesticks or the market price, which is what we call it. And in doing so on the chart, we get to understand and of course see how price moves around liquidity, how price moves around structure, moves around key levels, just to the end that we understand the likely intent of the market. So we are using the available data to make a likely forecast of the uncertainty that the market is apparently having. We are using price and what liquidity is at work, buy side liquidity or sell side liquidity. I'll explain that, of course, later on as we continue in this discourse. And the structures the market is forming, and apparently the key levels that have been formed from the structure. So we pay attention to what it is. What is market liquidity? So if you care to understand what market liquidity essentially is money. Another way of saying it is they are where traders are likely to place their stops, like stop losses, where traders are likely to take a buy from, which is like the previous buy side or the previous highs or previous low. So when the market, I'm going to probably pull up a schematic chart right now to make more emphatic explanation on what I'm trying to make us get. So look at this. This is a schematic diagram of a typical bullish market in a perfect market scenario, which of course doesn't exist. The market doesn't go this way where you could always tell, oh, that's the high, that's the low, that's the high, that's the low, that's the high, that's the low. By the way, what you've just seen me draw is what is called an uptrend. So essentially an uptrend, of course, introducing that to you guys now, is a price action market where you see the market opening with an higher high and an higher low, leading to an upward movement in the overall layout of the market. So in a sense, you have an higher high, which is of course there, and of course a higher low, which is of course this. I'm going to probably do a very short annotation by writing HH and HL. HH means higher high, and this is what higher high means. So just to be clear, everyone understand my kind of way of pronouncing things. So you have higher highs, right? Then you have higher lows, like that. So higher high, which is this, And I think it starts from that point, anyways. Start from this point. Then you have higher lows, which is a low higher than the previous low. Whenever you're seeing this playing out in the market, which is HL, that tells you that the market is in a uptrend, right? I hope that that is very much gotten, right? So if this is pretty much clear and we already understood what we're talking about, we then are saying when it comes to understanding what market liquidity are literally the places where money is going to probably have more active engagement, or where money is deployed in the course of the month. So most likely money is going to be deployed in the there's a point, yeah, there's the, so money is going to be deployed in the point where there are equal lows or equal highs, because traders, retail traders especially, we have some readings from that. So when the market goes above the previous high, like you could see this point, some people will set a buy stop here. What does that mean? Because that's where you have the buy side liquidity. When the market goes above this particular top level, let me just sort of use a trend line tool to show us that in a iffy. When the market goes above that particular level, right, as it has done here, there are some, especially those who trade the forex market, there's a particular function called buy stop, which is once, so say I'm in a sell right now, I'm in a sell from this point coming downwards, and then the market retraces to this point. When it gets right here, just turn over my sell to a buy, right? Those functions are available not just in forex but also in crypto, and of course you could find that also here on KuCoin. So which is you're putting a buy stop, meaning once the market gets to this point where you essentially have your sells topped out, your buy is going to be triggered, right? Exactly. And this is one of the parts of where and how the liquidity component of the market is built up. So the liquidity of the component of the market is built up at areas of potential active or full retracement, areas where there are stop losses. So people have their stop losses set also to have their money taken out, and some persons also have their monies to buy or sell at around the area where people have their stop losses set in. Market overall, that explains, could be the point of the market's sell side liquidity. Just like we have a buy side, which is right above the previous high, which is like this above this point, that's the buy side. So market liquidity could be effectively executed here, because like once I enter a sell right there, it's not like you're playing options or you're trading options, sorry. When I have my sell right here, I could definitely go ahead to place a buy stop here, which means once should the market come back to my entry, just go ahead to make a buy for me, because of the retracement, right? So that implies that I already have money already fixed here. Why? Because I already have a premonition or a knowledge, or a foreknowledge that there is the possibility of the market going right above this particular high, and also and that buy stop could be set right above here, should in case the market goes like this and then it comes right above that point. So that explains that liquidity is just a broader topic or a broader word that explains the likely point of entry of money and likely point of exit for money. And this money I'm speaking of is your dollar or your Bitcoin, whichever asset it is you're using to trade. Now, we've introduced that shortly. I can then tell you that since we understand liquidity as this entry and exit, we know that all of those are what defines the open and the closure of every candlestick. By the way, you are aware that a bullish candle, if you don't know, I'm going to probably say that in 1 minute. A bullish candle opens upward, a bearish candle opens downward. Yeah, sorry, a bullish candle opens upward, then a bearish candle opens downward. Yeah, let me clear pause with an image if I can. All right, quickly. Bullish and bearish candle open. Don't forget, we're gonna probably go into trade right now, just the moment. But I want us to understand this right now. All right, so we don't so we just can be on the same page. I'm trying to ensure that we have common knowledge. I'm probably going to copy this also so nobody misses out. Right, I'm going to probably bring that back soon. I'm going to copy this chart also so I can drop this on every group page that we currently have, so nobody misses out on what it is that we're going to probably be saying. Yeah. So what you're going to probably be seeing right now, look at that. I just picked this from the internet. If there are copyrights, it's all there. But then this is it. You Canva, But then this is a typical bullish candle, it's green. A typical bearish candle is red, right? I mean, that's what you see. So the bullish candle opens upward, then closes upward, like I said, and of course the bearish candle opens downward and closes downward. So the eye is the highest point ever that the market or the candle trades into due to volatility. And of course, if you get to know what volatility is the degree to which the market moves on account of price action. So it could move way higher and of course way lower. That's like the reason. So market volatility in terms of price openings is the reason to why you have an eye, right? So that's the market eye apparently for the bullish candle. So now when it comes to, now having understood this, let me put this by the side, you could tell that every candle open and candle closure, every candle open and candle closure, bullish or bearish, is what comes together to explain a market liquidity. So when there are multiple candles forming, you could tell that liquidity is brewing up there, and in between the liquidity brewing up, you have a structure. I'm going to probably explain the market structure. So market structure is literally what you see right now. Several candlesticks are being opened right all the way till the market got to this particular point that you could see till the market got to this point. When it got there, another many candles, formed, open, close, buys, I mean, greens, reds, all of those like that, until the market got to the point of buy again from the selling point. And just that same way, you could tell that it kept on happening that way, like that. Oh, so several candlesticks forming between this point 0 to this point 1, point 2 to point 3 to point 4 to point 5 to point 6, and of course to point 7 in the schematic image. And you can always tell that as you look at it now in an overview, you could see that there was a structure. What's the structure? It is an uptrend structure. Why? Because we have an higher highs and higher lows and higher highs and higher lows and higher highs and higher lows. Then it forms a structure. So you could actually have a mental picture of what the market is essentially doing. Of course, then the market gets to a certain point where it can then switch structure. Then you begin to make sense based off certain of this historical price actions and of course candle opens and then structural look, what the market is likely to be doing. So the whole idea of price action is combining liquidity, which is candle and candle, and then combining structure, which is multiple candles forming a certain pattern. Maybe it is an uptrend or a downtrend or a consolidation or a kind of bearish flag, bullish flag, rising, rising, I mean, an upward triangle, a downward triangle, a wedge, whatever it is. So all of these candles forming this structure, are gonna form your narrative of what the market is gonna probably be doing as per its intent. So you have, you are then having several candles at certain levels being constantly respected and revisited. You have a key level. So it's respect, retraces into and gives some level of regard to either buying, one of which is order block and favor the gaps. All of this also we use all of this to read the market price. We're gonna come back here right now, but again, I'm just gonna probably run you back into the chart. All right, look at this. I told you we're gonna probably drop. So you guys, let's not rush. And again, if I said we're gonna come back to make a trade and we haven't yet done the trade, don't be in a haste. Who was doing that many years ago? 10 years ago, maybe some 2-3 years, right? And I did that times and times, because if you're rushing, you're gonna miss out on what you should learn. Why? Because your own candlestick will still form. I mean, I'm just gonna probably tell you that for free. I got to know that some 1 or 2, 3 years ago right now. Even though I've been in the market prior to that time, some 2-3 years also. Your candle will form. There's no need to rush. Yeah, because when you rush, you get to burn off your money. I did that, and you will always do that. And I'm not saying that when you now don't rush, you will not still burn money. Yes, you might, but it's not going to be for some ridiculous reasons, as you often were doing. Okay, so guys, let's come to show you something. Let me just hide this whole thing and bring you guys to the forward chart. So let's look at liquidity from a forward chart. By the way, there are different times, and that's it. So from this point, so look at this. From this point, I want to use a Okay, let me use this. This is good. Now, from this point, I can draw my drawing. All right. I hope you guys could see that. We don't have so much time. We're going to make a trade right now soon. To this point, what you see is multiple 4-hour candles. By the way, you know, one candle here represents one full 4-hour trading session. Meaning, whatever you get to eventually see, when you go lower, say a 4-hour, I mean, say a, how many hour? Say a 1-hour chart, you're going to probably see more proving that multiple things had happened there. Anyways, so you could see that in a sense, there was the point where the market candle closed with this candle, and where the market candle closed here is where this one opened, right? And of course, volatility made it come down. So if you look way closer, you'd see that this particular candle, it's weak, came below here. Why is that? Now, this questioning is what forms the thought process of ICT. You're trying to ask yourself that why this particular candle, though it had opened upward, it should have just kept on going upward, since there is no reason for it to have come down, since it's already closed bullish, and it should have just kept on going upward since the intent is actually upward. Why did it come down? Now, of course, you might not see the reason why it came down until you go to, say, a 1-hour chart, a 30-minute chart, or a 5-minute chart. Then you might find another block. 2, you might find a key level. 3, you might find a fair value gap around this point. Let me show you the point. So why the market dropped here, and of course why this market still dropped here, isn't that reason, and you would keep doing that. Anyways, so price action is literally one, is a combination of, you know, liquidity, structure, and key levels. And when you're looking at liquidity, you already begin to look at 1 or 2 candles. Then now when you understand liquidity, you begin to ask yourself, oh fine, why did this market come down? Yeah, possibly to take out people's stop losses, because stop losses could definitely be here, and then it went all the way back upwards, and when it got that up, it then came back to take people's stop losses. Why? Because definitely some persons might have been thinking to take a sell, and of course they took a sell from this point, and then the market went upwards in this way, and then it took them out right here, right? Of course, right here, and then it dropped down, and so liquidity. And then you begin to notice some points where the market seemed to still be respecting. So look at this. When the market broke above this point on the 4-hour chart, you could see that the 4-hour candle, the body of the candle never went literally below that point. Look right here. So the market kept on playing around this point, you know, keep reflecting it. See this point? It kept touching. How many touches do you notice right here? Do you see that? Yeah. So you see one touch around that. So liquidity is what is now then forming this is then what is forming this structure. What is the structure? Maybe it's gonna be on a double bottom. Then the structure then forms the key level, apparently, as you all could see, because you could see that the structure here is like an uptrend between. Let me help you, you know, quickly spot what I'm trying to say way more clearly. From here to here, you could tell we're in an uptrend, right? Because it's been going up and down, up and down, up and down. By the way, if we come right here, which is, I think, okay, April the 23rd of April 2026, let me come to a 1-hour chart and then zoom more closely at where we are at, so we can all be on this page. So see now, right now we've had up and down, right, like an uptrend. I told you, see that? So this is it, up and down, up and down, up and down. Because the first candle may not make you see that. You have another up and down. So apparently, while we are having multiple candles doing their thing, open and close, right, we had a market structure forming, right? An uptrend was brewing, right, like that. And of course, you could see this clearly on the line graph. So you could see an uptrend brewing, and along the uptrend that was brewing, interestingly, we had a point where the market was going to react and respond to. That when you draw this right backward, you see the market respecting sell from this point, but from this point, you know, this point then became a key level. Let me change the color to something orange, and of course making it maybe bigger. You can see that's a key level, and then you begin to see, oh fine, it was at this level, buying and buying and buying, all of that, which of course was what we saw on the 4-hour chart. And then you'd see that historically over time, the market then begins to, you know, kind of respect that same point in history, right? So you could see the key level we had drawn following understanding what the market structure was was saying, we saw, or we then can see that that level is being respected at some point. See that? See that? Then see this? Broke above, retested, boom, went off. So like that, of course, then you get to see, because every story of the market explains way more. So you could see the key level, right? That same key level is respected. And now where are we? The market is really right now down there. And I'm telling you for a fact, if the market ever gets there in time, if it gets there, it's going to also react, right? And so this is what ICT price action is all about. Let me check if I've got questions in live room while we go pick up a trade. Now, if you've got some trade right now, say you have one trade, one chart, one token, whatever it is you want to analyze, let me know. Maybe I should just pull up a random chart. I mean, we've already analyzed this one yesterday. You could check our live stream yesterday. We made a precise forecast on what we think market's going to probably do. And of course, that's where we are right now. We're saying the next buy zone for Link is right here. So we're just going to stop on price action introduction. Let's use this to analyze one market. I don't know if we should analyze Bitcoin, but then this is our understanding and our analysis so far on the markets. I think so. Yeah, so is someone in the live room wanting me to analyze on a particular chart, on a specific chart, on a specific coin? Mention the coin. Let's look at it. Maybe I should look at, yeah, let me look at BNB or ETH or KCS. I don't know if anyone has a suggestion. I wish I could actually do a poll. I mean, I'm gonna be like, so and if you can do a poll also right here, right? All right, since we still cannot do a poll yet, if you don't mind, let's just pick a random coin. We should look for a coin that starts with E. And I think Bitcoin is one of those coins that really respect price actions so much. Maybe we should analyze Bitcoin again. So let's come to Bitcoin, guys. All right. So I told you, look at that. Oh my god, I wish we had entered. Right now, I'm not gonna probably say we should enter this trade. It's dropped. Because this is the take profit. It's gonna probably smash below here and of course come below here. All right, let's just analyze it all the way. Let me just use the chat. All right, I know we've analyzed the market selling from this point here, and we felt the Monday candle open will be taken out soon. Guys, I think we just have to enter this market all the same. Use this point as a stop loss. Looking at the 1 hour chart, I can tell you that this liquidity will be taken and it's going to come for this one. Yeah, it's going to come for that one. Okay, let me target the 30 minutes candle open. So apparently, now look at this. What do you think it is? When you look at the candle open, the liquidity structure on the 4 hour chart. Let me start with daily time frame to explain price action for you. So look at the daily time frame, guys. This took out a sell side. So it dropped below here. Was the market taking so this is the sell side. Below a low. That's the sell side. So the market went ahead, never to go above the buy side, above a high. Market didn't go. I mean, it didn't. Then it's keeping this range. Interestingly, the market then begins to range around a key. I hope that makes more sense now looking at it. So you can see the market going right in that range, and then you could tell that all of these signals so the market still having interest to take liquidity either above there or below you. So like it or not, either the market is going to come for this, it's coming for that. I mean, there's just one of two ways for the market to move. Now, seeing the candle closure here for Monday, it became clear to me that this market is certainly going to sell. And as such, we could tell that the next day's candle took the low of the previous day. All right. And then this candle took the low of the previous day, that's Monday. Then Wednesday's candle never took the low, right? And then this. I can tell you for a fact, right, that this candle is going to take the low for this, and of course coming for this particular days. I mean, that's clear. Why? Because you're seeing multiple sales playing out at the same instance, the huge and quick rejections around this point, which means that this push here looks like a Judas move. What is a Judas move? It's a false move. The market was not having any interest to essentially buy. It was just knocking people's stop loss out. That's what the market has just done here. This is a Judas move. And if you understand that to be a Judas move, right, this is not a moon. No, it wasn't. It wasn't a moon. That's not a moon. So just gonna probably put liquidity around all of these points so you could see what this whole thing is about. The liquidity is what I'm representing with a dollar sign. Right. So since this is clear enough for me, what I'm going to probably do is go to 30 minutes and of course see the next candle open. I'm going to probably look out for a sell and play into the sessional game. Right. This is going to be probably my next protected low. I'm not going to probably take a short right here because if I'm placing a short right here, I'm being reactive, but then I might not get a bad proper retracement. But what I want to do just is to look for a next perfect point of short. That's what I want to really do. So I can see that this eye brought this low brought this eye. This eye is not yet bringing a new low. Right? Okay, so this is immediately, yeah. This eye, this low, this eye, this low. Okay. This point is still higher. On a line graph, on a line graph, this point is higher, right? Yeah, let me check. But when I use line graphs to see things for what they are, white and black. All right, so of course the higher the time frames, the higher your bias on those time frames. So you have the 4-hour chart time frame way more stronger than a 1-hour chart time frame. That way, of course, till other time frames. So this eye brought this low, this eye brought this low, and this eye brought this low, meaning there's already a low right now. And so this particular eye. So if you want to risk a trade, I don't know if you could risk I don't know how many percent is that. I don't know. How many percent is that? It's like 0.67%. Anyways, if you want to risk that and you want to put your stop loss right here, it's almost like 1:1. I wouldn't do that. So this is the mathematics that goes into you understanding what it is you want to do. So for me, I think what I'm going to probably do is wait for the next 4-hour candle open. With that, I'm going to get a better entry, right? By the way, this is a bearish engulfing candle. So whenever you see engulfing candles, it is like one of those bearish strong points. Yeah. So, and that one is forming already, which is essentially going to be ending in the next, say, 22 minutes, right? So I think this is serious. I'm going to be like honest with you. So, let me take this one out so I can analyze my market clearly enough. So this is a downward trend as a structure, and this is a key of the market is respecting. I'm not sure if the market is going to come back here, or if it's going to probably come back there, then I think I'm going to look forward to taking a shot from that point. And by the way, whenever a candle forms and closes, liquidity is already created, right? When the market got to this peak point, liquidity was created here, which means that there's a possibility for the market at some point in time, like it or not, to come back to visit these particular levels. So whenever you see a fair value gap, liquidity is also there. Fair value gap means there's a likely point or a likely reason for the market price action to trade into these particular zones. So making us understand price action by showing us what other blocks are like, showing us what liquidity looks like, and so we can, as a people, understand the understanding of price action from the lens of ICT. Then remove the middle. The market is sort of respecting that point as a demand. Because demand means a point of buy. Not saying the market will always buy from that point, because definitely many buy points will be violated in the course of the market. It's simple. So now, what then is the likely thing the market is going to probably be doing? Now, many things or factors have been brought into play as to understand what the likely thing the market is going to probably be doing. Right. First off, you need to admit that there is a bullish order block right here. But we're not sure if the market's going to probably respect that. As you could see, it touched right there, but then it successfully didn't go right above upwards. When it dropped down, candle wick also, which is this candle wicks is a suggestion of market rejection. So this is a rejection of this upper move up, going upwards. This rejection is a rejection of the market going, buy. So this rejection here tells the market is selling. Rejection here tells the market is buying. Rejection here tells the market is selling. So there are many rejections left and right. So then how do we then draw which rejection is important? The higher time frame rejection is way more important. Previous rejections selling the market. And of course, when the market now successfully takes a very strong point as this, for example, if this market drops right now and comes below here, which is the immediate local demand level, then you know for sure the market is going to come for all of these points, right? So now that's clear. I think if you're going to probably be asking me what I'm going to probably do, I'm going to probably wait for this power candle to close, which is going to probably be in the next 19 minutes. I want to wait for that. Why? Because the next 4 hour candle, if it's going to probably sell, it will open upwards, giving me an opportunity on avenue to play with the retracement. And yeah, this is it. That's how we go about looking at the market in an ICT sense. So if you look at this, right, this candle went above this, and then this particular candle took out all the lows below this candles, except this. And now it has retraced, and now this is currently where it is. And it's currently also stalling at this key level point here at so this point seemed like a very strong demand zone. That's at 63,346, and I think the market at some point in time is going to probably break that point. Just pay attention. So the 1 hour chart is also explaining why there is no breakthrough. The market is rejecting at that point right now. So probably we're going to wait for the next 1 hour candle to retrace to gain more momentum before it eventually breaks downward. So now ask me, David, what do you think? I think I'm going to probably want to wait. Of course, I have a position in short already. I'm looking at that. But then I think this point is going to probably break. I don't know what is going to break it. But then I think if I'm going to probably take a short, at least, even not this, I want to see the market do something like this. So once I see something like this, how do you know something like that likely happen? So what I'm making my bet or my guess on or my focus on is this immediate liquidity has to be taken for the market to gain a buy momentum, because definitely there is a buy momentum somewhere around here, because there is a liquidity resting here, and it is a sell stop liquidity, right? Which apparently is the point of stop losses for a lot of persons. And if that is the case, then I think I'm making a forecast that the market is going to probably come take this point out. In fact, it could come below here. I'm not arguing it might not go against that. And so I'm making a case for the New York session, actually, that's going to be probably be our session I play for New York. So either it stops right here and then goes back up for us to take a sell, or it drops right now here like this, 3100, and goes back up and then drop. So anyways, my point of sell for this trade, I'm giving that out freely right now, is what I'm going to probably be showing you. I'm making this point my local low, which of course is not, it's an internal range. Yeah, I know, but then it's my local low. Right, that's my local, sorry. Yeah, that's my local low for the time being. Okay. The stop loss is going to be like right there for that one. And I am suspecting that if that doesn't happen, so what I'm thinking is this: take a shot from this point. Knowledge. So what I'm probably wanting to do is this. Yeah, this is likely to happen as well as this also is likely to happen. I want to place a first shot, the first possibility. All right, I think this is it for me. Oh yeah, that's it. Sorry, I want to put the liquidity somewhere where everybody could see. Yeah, maybe making it bigger. Okay, so I think that's it. So this is the whole analysis we have for today. And I want to say thank you for being a part of what we're doing right now. So I think if you are now, let's look at this. Let's look at the Tokyo session. So you could see the London session has happened, and I think right now, if you're me, I would tell you to take the profit you've made from London. Let's wait for New York. I mean, I'm telling myself this fact right now because I think, you know, what's it called? I mean, I think, yeah, I'm closing out the trade right now. I'm waiting. I think, what's the word? New York would give us an opportunity for us to take a buy from, except from that point. All right, I think that's it. So this is London apparently playing out, and it's already closing, wrapping off, and it could drop down fine. If it doesn't, good. If it does, good. But again, let's just keep our eyes fixated, and of course, finger crossed, waiting for this to happen. All right, so I think we are having a very pleasant day with this live session. I don't know if there are questions from the live room. I'm gonna probably take a short break and then come back to know if there are questions. If you have questions, drop them in the comment section. I'm gonna bring it back. I mean, this is one of the smoothest analysis we've had in a very long time. But again, this is it. The market is not a play zone, it's a war zone. And you must see it that. Okay. I'm gonna be right back. Taking a short break. Enjoy the break, guys. Yeah. All right. I mean, I think. Oh, boom, 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 boom. I think we're good. Let's just maybe wait for that. And I think that's going to probably be it. But then I think it's going to probably drop all the way down. But then taking the profit is not wrong because there's no profit taken out is a wrong thing, you know. So when seeing the market come to 63 200 should not make you feel, oh, sad. Let's wait for this. 63 764 is going to probably happen very much soon. And by the way, this is Thursday. We're going to be leading this up onto the market closure. I want to say thank you for joining us today. It's another 1 hour dose of so much information in a very short time, I guess. But then I think it's such a great one. Hello, Bentayab. Thank you for joining. By the way, if you don't know what it is we really did today, we literally introduced everyone to the understanding of ICT trading and, of course, market analysis and trading. We began by discussing price actions and okay, let me just show you what we did on price action is this. We showed folks yeah, we literally had those drawings here on our trading Canva on KuCoin. We literally showed folks what price action is and of course the components of price actions, which is the way you read the market or read the price market candlesticks essentially, and how it revolves around liquidity, how it revolves around candlesticks, how it revolves around key levels, right? So we did that so everybody can be able to, as a matter of fact, on their own accord, read the market charts, analyze it, and make meaningful decisions with its weight. Not this chart, I guess. Must have been this other chart. So let me show you this chart also on KuCoin anyways. So quickly, yeah, perpetual. Come on, why am I not finding this now? Oh, boom, boom, boom. Okay. Yeah, I found it. Did I? I don't think so. What? So sorry about that. Okay. Let me just quickly wrap up by showing you guys that. I really wanted you guys to see this. Oh my god. Okay, let me just use that. Uh, in this place, it's gonna probably be patient. Yeah, this is the chart. So we use this chart to explain to folks what price action is, right? As you could see, right? If you care to look at it for the last time, those of you just joining, we explain price action as regards ICT. Of course, ICT meaning inner circuit trading. We made mention of the component of price action, which is liquidity, structure, and key levels. So that's the LSK of price action. And then, yeah, we discussed about all of these connects to each other, and of course, how that liquidity forms structure, structure forms key levels. And that with these, we're able to understand the market. And of course, we're going ahead to use that to analyze Bitcoin, which essentially we did with this. So I think that's it. So we're waiting for 1 hour candle, 1 o'clock West Africa time, which has been 5 minutes to open. 5 minutes candle is going to probably open, and then we're going to have the 4 hour candle nearly opening. I think that's it. And that's our analytical stance at the point in time. All right. So thank you very much, guys. Our analysis right on Bitcoin is simple. We're going to be taking a shot on Bitcoin right about 63,780. Stop loss at $64,010. Not a financial advice, by the way, and I'm not a financial advisor. By the way, I think you must be able to own up to your own. So take care, stay safe, keep winning. And again, we did a recap on the trade we took yesterday, which was this. Yeah, yeah, so it was this, and yeah, we showed you guys that how the market played out, and of course, we had a very great profitable trade. So I must say that it's been so great right here. Don't forget to tell a friend to look forward to joining us right here. I remain your humble host, David on KuCoin. And if you're on YouTube, ensure you own an account with KuCoin and look forward to joining us. Peace out. Thank you for coming. All right. Thank you. And let's call it a bye. Until tomorrow. Bye.